Hello and welcome to this Baillie Gifford event entitled High Growth Investing in a Low Growth Economy. I'm Richard Lander of Citywire and I will be your host today. As I'm sure you already know from your invitations, the economy in question is Japan. It's a country whose economic problems have been evident for many years, but as most investors appreciate, choose the right companies and you can probably make good returns in any market, whatever the backdrop. So to discuss what can be done, I'm joined by Praveen Kumar, who's the manager of the Baillie Gifford Shin Nippon Investment Trust, which specialises in smaller Japanese companies. So a warm welcome, Praveen, and thank you for joining us. People see the Japanese economy and how slowly it's grown over many years and think it's much better to invest elsewhere. There's all these exciting emerging markets growing with 4, 5, 6% annual growth. How do you go about persuading them otherwise it is worth investing in Japanese smaller companies?
I think this has been a long-standing challenge, Richard. I think from my perspective, investors need to disentangle an economy with the stock market. So just because an economy is showing fast growth doesn't necessarily translate into attractive long-term stock market returns. And for us as fundamental bottom-up stock pickers, we are more focused on companies that have very attractive long-term growth prospects. And those kinds of companies are numerous in Japan, especially in the small cap space. So my suggestion or my kind of advice would be to kind of get out of this mode of equating an economy, its growth prospects with those of a stock market. Because for a low growth economy like Japan, let's face it, the economic growth prospects of Japan are perhaps, it's quite a mature economy. So the growth prospects are not that attractive compared to, say, emerging markets or even some parts of developed markets. But that doesn't mean you can't generate really attractive returns through the stock market, through the Japanese stock market in the long run. And especially in the smaller side of things, small caps, you can generate some really astonishing returns over the long run if you pick the right sort of companies.
Right, okay. So Japanese smaller companies, it's an asset class that probably a lot of investors on the call today are not that familiar with. So perhaps let's start off by defining what this asset class is and why you like it so much.
Sure. So I think the easiest way of defining that would be to try and use our own definition of what a small cap is. So we define a small cap as a company that has a market cap or sales of roughly around $1.5 billion or below. So anything above that, obviously, it gets into sort of the mid and large cap space. So our kind of sweet spot is $1.5 billion of market cap or sales at the time of initial purchase or below. Now, if you look at the small cap space, the small cap universe in Japan, it is quite a rich, diverse universe. You have an extremely large number of companies, probably somewhere in the region of 2,500 to 3,000 companies, and these are listed companies. But the vast majority of them are of no interest to us, given our explicit focus on high growth, disruptive businesses. So as a comparator, if you look at the benchmark that we use, so we use the MSCI Japan Small Cap Index as the benchmark, that has just over 900 stocks in it. And of those, there'll be a large proportion that are uninteresting to us for reasons of, them being in mature industries, very, very illiquid stocks. So if you start applying those kinds of filters, you effectively end up with, say, about 200 to 300 stocks, roughly speaking, that would be of some interest to us. And just one final point worth making here is it's not all about technology. It's not all about manufacturing. If you drill down the list of these sorts of companies, you find a mind-boggling variety of stocks. So just to give you an example, we have some brands that people might have used in their kind of day-to-day life, but might not be aware that it's actually a Japanese brand, for instance. Healthcare is another exciting area where we're seeing quite a few sort of young companies do some exciting work. And then even the internet space, which tends to be a catch-all term, we have quite a variety of companies focusing on numerous different sectors within Japan. So suffice to say that there is no shortage of finding exceptional, disruptive, high growth businesses within the small cap space in Japan, spanning a range of sectors.
Okay, so you've narrowed your field down to about 200 to 300. You've got rid of all the rest. They're too mature. They're just not doing interesting things. How do you then whittle this short list down to an even shorter list that says that you say to yourself, I want to own this stock?
So any company that we look at, including the ones that we already own, we always ask ourselves three central questions. So the first most important question that we try and answer in our own minds is, what is the problem that this particular company is trying to solve? So what we are looking for effectively are problem solvers. Now, like with most economies globally, Japan too has its share of issues. There are some long-standing structural problems resulting from outdated business practices. So just to give you an example, various industries across Japan have a multi-tiered distribution system, which means that as an end customer, you're not often dealing directly with the supplier. So you have multiple parties in between. And what that does is, along with increasing the complexity of the supply chain, it just adds on layers and layers of costs. So as an end consumer, you end up paying a much higher price than what you would have if you were dealing direct. So a very simple example, and we have companies that are trying to address this kind of inefficient supply chain issue by cutting out the middlemen completely and by employing a kind of direct to consumer sort of model. So just to give you an example, one of our long-standing holdings, we've owned the stock for almost 15 years now. It's a company called M3, and this is an online drug marketing platform. It runs Japan's largest such platform, and it's basically disintermediated the entire medical rep kind of layer. So the traditional way of marketing drugs would be you would have an army of medical representatives visiting doctors, surgeons, flogging them stuff that they most often don't need. And it's all a very, very inefficient, costly kind of a structure. So basically M3 through its online platform has completely done away with that. And now doctors and surgeons can directly liaise with the pharma companies, pick and choose which drugs they want to be sort of marketed at. And M3 takes a commission in the process. So a very, very simple model, just cuts out all the fat from the system. And we've seen similar models emerge, not just in healthcare, but across a wide range of industries. So just trying to answer this question in terms of the problems that the companies are trying to solve. And the second thing we look at is the opportunity set. So what we're looking for are industries that are large enough, and these may be growing industries or shrinking sectors. And the opportunity set should be large enough to sustain at least 5 to 10 years worth of pretty fast sales growth. So that's the second key thing we look for. And the final thing we look for, and this is perhaps where we place a lot more emphasis, is on management. So typically the stage where we invest in these companies, they tend to be relatively immature. So you do need to have a really strong-willed risk taker at the helm, someone who has a lot of skin in the game through substantial shareholdings in the company, and someone who has a reasonably well-defined long-term vision, someone who's ambitious. So as a team, we spend a lot of time meeting the founder, the management, the CFO, the CTO, all the second tier as well, to try and form a view of, are these the kind of visionary guys that we should be backing, which, in our experience, backing such individuals has resulted in, some exceptional stock ideas for us. So that's sort of the process that we have for every single stock. And if a stock ticks all these boxes, then, there's a good chance that it gets into the portfolio.
Right. So you gave the example of M3 as a problem solver stroke disruptor. Maybe can you give us a couple of other examples that fit the other boxes as well?
Sure. So one of our recent holdings, and we bought this stock in the middle of last year, is a company called GA Technologies. Now, this is a company that's trying to drag Japan's archaic real estate industry into the 21st century. Now, the real estate sector in Japan, is probably one of the least kind of modernized, very, very limited use of IT. Business is primarily conducted over phone and fax machines, believe it or not. So very, very outdated business practices. And through COVID, there's been a bit of an impetus in terms of modernizing some parts of the system. So, for example, the use of digital contracts. So typically, everything was paper-based, but because of the pandemic, people, have not been able to go to their offices, certify documents.
And you had the
So
signal
that has
that people use.
exactly. So they had this seal called Hanko, where every employee has a Hanko seal, and these are usually kept in the office for confidentiality reasons. So obviously they were not able to access that. So that's given a fillip for digital contracts, and that part of the supply chain is growing quite rapidly. So basically, Geotech has built a complete online platform. It's developed entirely in-house, and it's got an artificial intelligence engine through which you can basically carry out any kind of a real estate transaction end to end. So to give you an example, if you want to buy a property, whether for residential purposes or investment purposes, or for leasing, etc., you can search on their platform, actually do online viewings. You can actually conclude the transaction through their platform, use the digital contracts that, again, they have a separate plugin for that. And interestingly, you can even apply for a mortgage, just all within the same kind of a platform. You don't ever need to sort of go out, visit a separate website. They have tied up with a number of banks. And not just that, they've gone beyond that, and they've also added functionality whereby through their platform, you can even source people for renovation. So if you want to get some work done in the house, you again don't need to go searching on some alternate website. You can do it through their own site as well. So it's almost positioning itself as a one-stop shop for everything real estate. And the founder he's in his early 30s. He's got a very interesting background. He used to be a professional footballer in Japan. So nothing to do with real estate, nothing to do with technology. But he couldn't make the cut in sort of the Premier League of Japan, the first division. So he quit with disillusionment and joined a small regional real estate company where he actually saw firsthand all the issues. And then he taught himself coding and built the kind of the basic skeleton of the system. And then, he started the company. So GA Technologies is another example of, a founder who's got a vision, and he's actually executed quite well on that vision. And, the growth opportunity is quite massive. Japan's real estate industry is, worth at least a few kind of hundreds of billions of dollars, if not more. So that would be another example of the sort of company we're looking at.
Great. I mean, you touched there that practices have changed because of the pandemic. And it's a story we're familiar with around the world, that we've all gone digital. I mean, just look at the way we're doing this. But has it had more of an effect in Japan, do you think, than in the rest of the world, just because they were that much further about? I mean, we got rid of sort of wet signatures quite a long time ago, or at least a lot of people did.
Yes. I mean, obviously, it's still early days to say definitively whether some things have changed for good as a result of the pandemic. But nevertheless, what we are definitely seeing is a gaining acceptance of some of these new kind of technologies, new ways of doing businesses. And also, interestingly, we are seeing a noticeable change in consumer behavior. So just to give you one example, if you take the online food delivery market, right? So in the UK, it's a very, very advanced market. We have quite a few companies operating in the space. Deliveroo, for example, recently had its IPO, although that didn't go too well for them, unfortunately. So in Japan, Japan has always had a big tradition of eating out. Japan has some of the world's, it has the world's largest number of Michelin-starred restaurants, actually. So there is a big culture of going and eating out. So that has meant that you've never really had this kind of an online food ordering, food delivery type market. But that's been sort of turned upside down by the pandemic. People have not been able to go out. Restaurants have basically been shut. The vast majority of restaurants in Japan are still shut, in fact. So we own a company in the portfolio called Demaikan, which is Japan's #1 online food ordering and delivery service. And that's had a significant tailwind from the pandemic. And now we're at a stage where you would expect that, with vaccination programs carrying out in Japan, the kind of growth rates we saw during the pandemic for this company would kind of moderate. If anything, there's the opposite is happening. The growth rates are continuing to accelerate, which sort of suggests to us that actually people are taking to this alternative option of eating restaurant food. So we are seeing similar signs in a number of sectors. Digital contracts, as I've already highlighted, being another example. So I'm quite hopeful that a number of the trends that were gaining a foothold gradually over the years and that have got a boost through the pandemic, they are likely, going to remain. It's very unlikely that a lot of these will just reverse and we will go back to, the traditional kind of practices.
Right. I mean, just looking back a little, I mean, people of a certain age, by which I mean myself, we were in the 70s and 80s, we looked at Japan, and just it was the most advanced economy in the world, or seemed to be. So you had car production, which put British car plants to shame. You had the Sony Walkman years before you had the Apple iPod. Where did it all go wrong? I mean, it seems like at some point the rest of the world overtook Japan in terms of innovation, management techniques, technology.
Yeah, I think that's a fair point. And I think one way of, people always talk about the lost decade and, has Japan lost competitiveness, etc. But, these are all the usual headlines that you get to see in the FT and, the usual kind of financial press. If you really want to get a sense of what's actually happened in the last 20-25 years in Japan, you actually need to visit Japan, speak to these companies, and get a sense, because what you've just mentioned is just part of the story. It's not the full story. The full story is that, yes, Japan was quite a powerhouse in sort of consumer electronics, autos, etc. You can argue in autos it is still quite a strong player. But what's actually happened in the last couple of decades is an entire generation of Japanese companies have actually shifted away from making these big, visible things like your Sonys, etc. And they have specialized in some very niche, mission-critical kind of components. So these things you don't necessarily, get to see as an end consumer. So I'll give you a simple example. So one of the companies we own in the portfolio is called Harmonica Drive. So it makes a very, very tiny component called a reduction drive, which goes into robots, and it controls the precision with which a robot's arm moves. So quite a critical component. And this company has 50-60% global market share. Now, quite a few investors, even in Japan, interestingly, haven't heard of this company. But, it is a massive global player feeding, all these robotics companies from Japan itself, the Chinese companies, Germany, etc. So that's quite illustrative of the type of shift we've seen within Japanese manufacturing. So it's no longer about making, the big kind of, televisions or cars or whatever. You're seeing a whole swathe of mid to small tier companies that have quietly gone about their way and specialized in these critical kind of technologies. And even if you take EVs, for instance, so, we have an entire range of small companies that are developing quite specific and very important components that go into EVs and have global shares, leading global shares in those. One of the companies, we don't own this company, but it's called Nitoku. And it's got the world's largest, more than half of the global market in what they call as coil winding machines. So if you look at EVs or any of these new age technologies, they need components that have wires wound around them very, very densely because of the number of electronic bits that are going into cars. And making that is very, very kind of precision-led. So that's the shift that we've seen, and that's something that's not always captured in the popular press.
That's fascinating. So it's going on behind the scenes rather on your TV
exactly.
Or on your headphones. Really interesting.
Exactly.
So you've talked about this sector, and I'm sure there's a lot of investors on this call who do like smaller companies because of the growth prospects. So how would you differentiate the Japanese smaller company sector from those in other parts of the world, particularly Europe and Asia, perhaps?
Yes. So, I mean, if you look at smaller companies in general, not just in Japan, but globally as well, one of the common characteristics that you would see is that as an asset class, this remains very, very poorly covered. And if you whether you look at some of the U.S. stocks or emerging markets, a lot of the smaller companies, asset classes, there just doesn't seem to be that level of market coverage. So people just aren't aware of these sorts of companies. Now that problem is even more exacerbated in Japan, simply because the Japanese analysts tend to be a very, very lazy bunch, and the way the incentives are structured in that part of the investment banking industry in Japan means that as an analyst you have much better career growth prospects if you're covering a Toyota or a SoftBank or one of these marquee names, compared to an idly piddly company that a lot of people in Japan also haven't heard of. So as you go down the market cap spectrum, the market coverage basically almost trends to zero, which means that you have an entire universe of stocks that remains undercovered or not covered at all. So for someone like us who's willing to put in the legwork, go to Japan, or at least when we were able to go to Japan, meet these companies, the headquarters, find out what the story is. If you can identify a few of these gems early on and invest in them, and then if they do their stuff, the kind of upside or the kind of money that you end up making in sort of 5 years, 10 years can be absolutely mind-boggling. So that's sort of one common theme that you see within small caps that's exacerbated in Japan. And when you compare Japan with small caps with other small caps, the other thing that stands out is just the massive valuation disparity. So for some reason, a bit like the overall Japanese market, the Japanese small caps tend to trade at a much larger discount compared to, say, the US or European counterparts. And part of the reason for that discount may simply be lack of familiarity. People are just not aware that you have these rapidly growing companies that are growing at 40%, 50% year in, year out, generating, exceptional sort of returns, and, no one's heard of them. So part of this valuation disparity might be explained by that. And the other aspect might also be the feeling that maybe investors think that because a lot of these Japanese small caps are focused only on Japan, they're not really kind of, global businesses. Hence, you need to apply some discount to them, which I personally don't agree with. So you put all these sort of reasons together, and then you start to see, why Japanese small caps trade at such big discounts to their other developed market counterparts.
Right. I mean, maybe just put some numbers on there. How much of a discount?
Sure. Yeah. So if you look at the index that we use, so the MSCI Japan Small Cap Index, so based on next year's earnings, the index is on a price to earnings ratio of about 14 times, very roughly. Now you compare that with, say, a similar index in the US, which you could take, say, the Russell 2000, for instance. So that would be on, a high 20s or a low 30s PE. So obviously, there's much more excitement and expectation for the US kind of small cap stocks, for instance, compared to Japan. But if you look at the growth rates, the overall growth rates, there's not that much of a difference. And you also got to remember a lot of these Japanese companies, they usually tend to have quite different business models, which means that they have an excellent chance of, if they can use their first mover advantage, the duration of growth can be much, much longer compared to, say, in the US, where, you tend to get competition fairly quickly coming in if they see that, it's quite an interesting area to be in. So just the longevity of the growth opportunity means that you can actually, not just pay less for much higher growth, but you can enjoy that for a much longer period of time, which means that, the kind of returns you make over long periods of time can be quite exciting.
And you've got companies growing at a higher percentage rate than their price earnings ratio. So I know a lot of people look at PEG ratio, and the lower the better. That's interesting.
Yeah.
Just to go back to something you mentioned earlier about putting the legwork into researching companies there, and obviously discounting the fact that you can't travel now. I mean, how difficult is this not only because of the geographic distance, but the language and the culture. Do you have to have people on the ground there who are fluent Japanese speakers, or how do you go about this in normal times, let's say?
Yes, so the way we've tended to operate over the years is every member of the Japanese team goes to Japan at least twice a year for 2 to 3 weeks. And during that period, we meet with quite a large number of companies, both small caps, mid cap, and large caps. And for your company meetings and things, we usually have a translator. So the language issue is not really an issue. It's more of a non-issue, if you ask me. It's not a problem at all for us. Within small caps, the one issue that we have is a lot of the times these companies, they don't even tend to have English language websites. So, how do you even begin to kind of research? And that's where, having a dialogue with management. So typically we have conference calls with them with a translator on the call, get the basic information and then ask them to send us information and then just do a bit of a wider reading around. And eventually we've been investing in Japan since the early 80s. So we have a decent level of knowledge base in terms of what the issues are, how could these issues be solved, and what companies are trying to do to solve it. And more importantly, we also know where not to look for ideas. That's half the battle won. So, for example, for Shin Nippon, we wouldn't be looking at any resource type companies or companies that are very capital intensive. So the focus is very much on fast growing capital light businesses that can compound their earnings with very minimal capital investment, that kind of an idea. So our experience obviously helps, and we have quite a decent, well-resourced, experienced team as well. And in terms of research capability on the ground, again, we've been operating solely out of Edinburgh for decades now. We think by staying away from the market, all the market noise, the chatter, it gives us a much better opportunity of actually, differentiating noise from the signal, as it were. And we do quite a bit of wider reading around, which actually helps us in trying to form a much broader view of things. We recently, about a couple of years ago, we did hire a couple of researchers in Japan. So these are people who've historically worked in the financial services industry. But their task is not to do company research. Their task is more to kind of give us some sense of any regulatory change or anything significant that's happening from a political standpoint or regulatory standpoint that might give us an additional input into our overall kind of thought process. So that's really how we've tended to operate.
Right. So, just to sum all that up, it sounds like you need quite a lot of commitment there. Do you think this is why some investors just say, this is too much like hard work, there's all these other markets around the world, I'm going to tackle those first and then think about Japan?
I think so. And I think it's precisely that kind of an attitude that results in, quite a significant missed opportunity in my view. Because, people have, at least in my view, people still harbor quite outdated views about Japan. They've not really updated their mental models of, the Japanese economy and the Japanese companies. And unfortunately, those kind of outdated views continues to be reinforced by a lot of the mainstream financial press. So you end up with, an entire generation of investors who basically, at Japan as if it were the 1980s and just sort of give up on it. Whereas, the Japan of today is quite different. You have a completely different set of companies, dominating specific industries, generating exceptional returns. So my almost sort of plea to investors would be to actually, look at something like Japan with a fresh pair of eyes, not rely solely on, the mainstream Western financial press. And if you get the chance to actually visit the country, I think there's no better way of getting a sense of what's happening on the ground than actually, visiting the country and spending a bit of time.
No, I'm lucky enough to have been there twice, and it is absolutely fascinating. Right, I think we've been through lots and lots of ground there, and I'm now going to turn to the audience for some questions, and we've got plenty here, which is great. Let's start with one that a couple of people have asked, which is about You're also a manager on the Baillie Gifford Japan Trust. So maybe just outline the differences between the two trusts and what benefits that gives you, because obviously that's access, that is concentrating on much larger companies, including a big holding in SoftBank, I believe.
That's right, yes. So just to clarify, I'm the deputy manager on Japan Trust, and the difference between there are quite a few differences between Japan Trust and Shin Nippon. So Shin Nippon has a sole focus on smaller companies, but it is also an explicitly high growth strategy. So we don't compromise in terms of the growth rates of companies when we look at investing. So we're explicitly looking for really fast growing disruptive businesses. Japan Trust has a much broader remit. So it is almost an all cap kind of strategy. So it can, go up the market cap spectrum. As Richard said, SoftBank is, the largest holding. It has Toyota, etc. And it can actually go down the market cap spectrum as well. So what that means is it can own stocks that have different styles of growth, different types of growth. So, something like a Toyota would be a bit more cyclical. Japan Trust owns a few more robotics companies like Fanuc, so again, quite cyclical. So there is a lot more of a blend in terms of growth for Japan Trust. Shin Nippon is explicitly, the vast majority of the portfolio would be in really fast-growing businesses. The other difference would be that as a consequence of this kind of style of, really high growth versus kind of, better than steady growth, things can be a bit more volatile with Shin Nippon. So, as the small cap universe, there tends to be quite heavy participation of retail punters in Japan. So things can be very volatile, and sometimes that can be a bit unnerving for investors. But again, we are here playing a very long game. So in the long run, all this volatility and stuff doesn't really matter. Whereas Japan Trust, because it has a larger concentration towards sort of the mid and large cap, the volatility doesn't tend to be that much. So as my role, straddling both strategies, my role is to try and feed ideas from the small cap side of things that can then graduate onto becoming holdings for Japan Trust.
Excellent. You talked about volatility there, and another question says, how liquid are some of these smaller company stocks, which is a question that applies to pretty well every smaller company's market. But is it better in Japan if you want to trade these stocks, either buying or selling them?
Yes. So one before I answer that, I think one thing that's worth making clear is this whole idea of liquidity. It's a moving target. It's not a static kind of a metric. So, when things are going fine, when people are generally cheerier, suddenly you find there is, decent degree of liquidity in stocks that you thought were illiquid. Equally, when people are really skeptical, when, that there's something worrying investors, and, the liquidity actually vanishes. And interestingly, in those circumstances, even some of the large caps we found actually quite difficult to, trade. It's taken us a long time. But by and large, I would say the liquidity in a lot of these small caps in Japan is decent. And by that, what I mean is for Shin Nippon, which is, close to a £750 million market cap strategy, if we were to buy, say, 0.5% or 1% of a small company, it would probably take us, say, 5 to 7 trading days, very roughly. And even then, we are, for those who might not be aware, we now have a dealing team that sits in Hong Kong. So they basically, work during kind of part of the market hours in Japan, etc. So that has massively improved the liquidity options for us. So now we are finding a lot more different pools of liquidity which weren't accessible to us before. So I would say the overall picture of liquidity has improved significantly. And personally, I've not found any issue buying even some of the smaller stuff for Shin Nippon.
Okay. On to the next question, which is, I think the question that every fund manager should answer is, what was your biggest mistake and what did you learn from it when that mistake happened?
So it seems slightly strange for me. My biggest mistake was, um, so there was one stock that we had owned. It was quite a small company then. It's a company called Oisix. So it's Japan's largest organic food online food delivery company. And at the time, we held it for a few years, and then the company struggled to kind of scale up, and the demand side of the equation wasn't panning out as we had hoped. So we took the view that maybe this might end up being a bit of a niche market, and the company started opening their own stores, which was quite capital intensive. We didn't really agree with that strategy. So we ended up selling the stock. And the time we sold it, it was still a small cap, sort of 35 billion yen market cap. And today it's well over $1 billion. And the mistake we made was in not being imaginative enough. I think a lot of the times, a lot of the mistakes we make is simply because of a lack of imagination. We just see businesses as they are at the moment, and we just extrapolate from there. I think that's the biggest mistake any fund manager can make. I think the one realization I've had is you need to be cognizant of the fact that businesses change over time. Things change, the world changes. So you need to have a bit of creativity in drawing up scenarios saying, okay, this is what the company looks now. And management have these sort of ideas for the future. So how might this business look in 5 years or 10 years time? And once you start thinking on those lines, that's when you automatically reduce your sort of mistake hit rate, if that makes sense. So since then, I've also consciously tried to be a bit more kind of tolerant of, failure, and giving management space and time to actually put their plan in action, and just be a bit more imaginative, not get too hung up on near-term earnings multiples or whatever, because they tell you absolutely nothing about what a company might look like in 10 years' time.
Okay. Next up, on the other side of the equation, a much more comfortable one for you to answer. What's been your most successful investment so far in the trust?
So this has to be a company called bingo4.com, which is the one of Japan's leading digital contracts company. And actually, it did not start off as a digital contracts company. It started off as an online legal portal connecting lawyers with people looking for legal advice. And then the founder, the way I came across this company was by when I was reading an interview of the founder in the Nikkei. So, he's a very, very young chap, early 30s. And interestingly, one of the only entrepreneurs I've come across who's also a politician. So he's actually part of Mr. Abe's kind of broader cabinet. So I read the article. I had an initial conference call with them, met them in Japan a few months later, and found it to be a fascinating story, a fascinating individual, and he owns a big chunk of the company as well. So there was pretty strong alignment. And my view was, okay, this is a legal company, but there are so many different things that they can do within the legal space. And lo and behold, the founder just came up with this idea of digitizing all the legal paperwork. As you know, lawyers carry quite a massive bunch of papers, case papers, etc. So it started off, the digital contracts business started off in the legal fraternity, but then he saw the opportunity that actually this can be applicable much beyond the legal industry, and that's where it started growing like an absolute weed. So since we bought the stock, it's gone up quite a fair bit, at least over 10 times, and it's been about 5.5, 6 years since we bought the stock. And I still think there's still massive opportunity for this company over the next 5-10 years. So that would be one stock that I would say went in the right direction.
Right, and you're keeping it. You're not getting rid of it.
No, yes, definitely keeping it. Yeah.
Okay. A couple more questions. One is, I really find this one very interesting, that a number of other Baillie Gifford investment trusts hold stakes in private companies. Is there any potential for you to do that with the Shin Nippon Trust?
Yes, so we got board approval, I think quite a few years ago now, to go up to 10% of the trust in private companies. And I started looking at this space about 4 or 5 years ago, and so far I've got only 2 investments to show for it. And that gives you some idea of how underdeveloped this part of the market is in Japan. So the problem in Japan is, the private company space is extremely underfunded. There's very, very little information. There's no kind of network to give you ideas. You have to do all the legwork, including sourcing the ideas. And quite often, a lot of these companies tend to raise really small amounts of money, which means that for a trust of Shin Nippon's size, it would not really be economical because there's quite a lot of legal work that needs to be done. There are costs involved. But in the last 5 years, we've seen really, really positive signs of change. So now we're seeing a lot more companies coming in. They're coming in with sort of, complete English language documentation, which was an issue for us in the past. They're raising decent sums of money, but most importantly, these are companies that fit with our investment philosophy of being disruptive, growing really rapidly, willing to take risks, and with some really smart kind of founders in running the business. So I'm quite hopeful that although we have only 2 unlisted, private investments in the portfolio at the moment, if we were to have this conversation 5 years down the line, I would expect the number to be much, much higher than just the 2. So this is an area where I'm continuing to spend a fair bit of time.
So watch this space. Okay, final question, which I think is going to be incredibly difficult to answer, which is, what's going to happen with the Olympics? Because we still don't know they're absolutely going to happen for certain. We know that Japan will have to pay all its sponsors and the IOC a lot of money if it doesn't. But, there's no tourists coming in. That's usually a fantastic boost for a country's economy. We remember London 8 years ago. Is this going to affect the outlook for not just the country as a whole, but for the companies that you like to invest in?
I'd like to sort of quickly answer the last point of your question first. So the Olympics would have been a decent tailwind, but it's unlikely to have, a real big negative effect either on the economy or on, the vast majority of the companies, because a lot of the companies, in some cases, they've almost already, even sort of last year, they've basically written off whatever investments they had made for the Olympics. So, it's not going to be a big problem if it doesn't take place. Now, the question of whether it's going to take place or not, again, I wish I had a crystal ball, but there's been a lot of toing and froing, and we are at a stage now where the current situation is that the authorities are really aggressively pushing for the games to take place, even without any kind of overseas audience. But more recently, we've seen the Japanese public, or at least parts of the Japanese public, actually, rise up in opposition. So, now, unfortunately, the situation is still pretty fluid. There's no clarity on, what ultimately is going to happen, and obviously, it's going to be a big disappointment from a political standpoint. Japan is quite big in terms of, saving face and all the rest of it. So for a mega global event like this to be cancelled would be quite embarrassing. So my gut instinct would be that, and this might be one of the reasons why Japan is, so rapidly going through its vaccination program as well. My gut instinct would be that we will probably have the games, but, probably at a very kind of, cut down sort of level, not at sort of, the full-fledged games. Probably it's sort of a much diminished stage, I would say.
Not the games we used to. Okay.
Yeah.
It's now past 1:45, so I think we're going to wrap up there. So I'd like to thank you, Praveen, and thank you to everyone who's joined us today. Thank you for all your questions as well. We have another Baillie Gifford Investment Trust conversation coming up next week, when I am joined back in the studio by Tom Slater, who is co-manager of the Scottish Mortgage Trust. I hope we'll see you again. So one final word to Praveen to thank you very much. I think it's been a fascinating discussion about an area that is not that familiar for many investors. So thank you all, and we'll see you again very soon.
Thanks, Richard. Thank you.